Good morning, everyone. What's up? Welcome to another analysis here at Financial Hub. Another Wednesday, mid of the week. Looking at a few pairs here that are trading. Hope you're all well. Welcome to yet another day. So, as we analyzed the market on Monday, we looked at a few pairs. I think I went through most of the pairs that I trade, including the dollar, looking at the relative dollar strength, and I was expecting quite some. If we were to get that correction, remember what I analyzed on that day. What I normally expect when I'm looking at a correction is some ABC pattern correction that will guide me that structure of the market. That's 3 correction wave, and the market really fell ever since we fell from the 93.4. I'll go into the markets and look at it, and market fell all the way to the 90.6, 90.5 level without any major correction. So if you can get some correction along the way, then that's what I expect to see before we get that long-term bearish momentum which I expect in the market. So if you look at it, apart from that, yesterday we had quite some noise in the market. So if you do not understand what happened in the market, Ken did some research, got to found that immediately Janet Yellen had talked about, and for those who do not know Janet Yellen, she used to be head of the Feds, then now she is the head of Treasury in the US under Biden's administration. So she quite highlighted about interest rates being raised. So of course interest rates is what is the main in the market. That's what's fundamental across all the board, and it's what affects most of the market. When we're having a dovish tone and dovish and hawkish tone, those things really affect the market. So she touched on it yesterday. If you're trading the pairs, if you trade gold, if you trade dollar pairs, I'm sure yesterday saw quite a massive drop in the evening around that time. Markets really dropped and then sort of regained some of them. So that was the news that came out yesterday unexpectedly. It wasn't really expected. And apart from that, as I said earlier on in the week, this week, the main fundamental risks that we had was Aussie dollar interest rates, which were yesterday in the morning, which sort of affected the market earlier on in the morning. If you trade Aussie dollar, so it dropped quite a bit. If you're trading GA, there's quite that push to the upside. Apart from that, we saw things, we're expecting pound interest rates as well. And at the end of the week, to end the week on Friday, we have NFP, non-farm payrolls. So with that said, I'll go straight into the charts. Before I go straight into the charts, I'm sure most of you have seen our posts. We're looking for interns who can work with us here at Financial Hub. So that's what we're working for. Those are the people we're looking for. We sent the description on our Instagram post. I'm sure also you've seen them on our WhatsApp stories. I'll also post it later on. If you've not seen it, you'll see it. And we're looking for people we can work with and build this industry together. So we're thinking long term, and if you meet our criteria, then we'll be looking forward to working for you. One of the main criteria, I see someone was asking in the chat room over here, they're from Nakuru. That's Rush. So we'll talk and see what we're happening. But mainly for now, we're really focused on working with people here in Nairobi, because we want people who can. The main reason for that for now is because the people we're looking for, we want access to them. If they can come sometimes to the office and work from here. So that's why we are really focused on people within the Nairobi county. But yeah, so apart from that, I won't waste much time. Let's get straight into the chart analysis. I'll share a few things here and there, then leave the floor to Ken, and then we can wrap it up for there. I'll post this analysis on YouTube for those who do not find it from the start, or if you're looking to learn from it yet again, I'll surely post it on YouTube, okay? So I'll start off with the dollar. What I was talking about, so dollar, I'm always looking at market structure. I use a lot of Elliott wave to support my analysis. So I never forget to put my Elliott wave analysis at the back of it. So I'm looking at this wave structure, lower lows, lower highs. Now I'm paying attention to this part. I'm expecting one last push to the downside to finish the 5th wave, okay? So if I zoom it in, what you're basically saying, okay, so we had this major structure, this correction that we had here. We've been analyzing it for quite some time, and then we got this drop. So this drop is what I was talking about. Market really fell. No major correction has been seen within that level. And if I go to the 4-hour chart, or rather within that impulse wave, okay, so So if you can see, I've written over here, if we see a close above this level, expect some bullish momentum to complete the ABC correction. So if I get rid of this so that you can see the analysis well. So this level is this level. So if I just zoom it out, you can see support, resistance, a strong break to the upside, support, we got this strong break to the downside, and now what I'm just paying attention to, I'm not seeing that strong break of this level unlike what we were seeing before. Okay, look at this break to the upside. So I'm normally looking for those patterns to also repeat themselves. That strong break to the upside, strong break to the downside, and right now we've gotten quite some resistance over here, meaning that this level is quite strong. So you want to be paying attention to such a level. Look at that resistance. We got another resistance. Yesterday we also tried resisting quite a bit yesterday and Monday, but earlier on today we are seeing quite some break on this, but on that you have to really wait for that close first to confirm that we're closing above that. If we do get that close, as I said on Monday, normal corrections I'm looking for is normally an ABC correction. If you get that correction to the upside, then and a close above this level, expect some correction to come in into this. I'll be looking for the 61.8 level as my target on the correction, or 78.6 before that long-term push to the downside. This is just a major correction. I don't participate in corrections. They're not as successful as waiting for this impulse to the downside. So I'll be observing what pattern will form within that level before any critical decision is made. Okay, so if you look at that now, if I go to my pairs, things like Aussie dollar, but remember at first I've told you I'm waiting for that close first, so I'm not really rushing into that decision. Most of the times what you're normally seeing is market sort of dangling and trying to break above and then quickly closes below. So if I with that said, even before I go to Aussie dollar, for people who trade Euro USD, okay, so let me just go to my currencies. People who trade Euro USD, looking at the daily chart long term, I don't trade this pair as much, but it's just in line with what is it called, the dollar index. So it's just in line. You can see we've been having a long-term uptrend, so within this channel like formation, higher highs, higher lows. So it's also something you want to be paying attention to. And ever since we got this trend line bounce, you can see that massive impulse that came into the market to the upside. So I still expect some correction over here. As I said, just like dollar index, we've seen that push. Of course, we expect some correction along the way, and then from there expect the market to continue rallying further up. So if you trade this pair, watch for that momentum long term. I expect this market, at least even if you get this correction a bit deeper, a bit lower, ultimately expect to see some push to the upside, because it's also currently at a critical level, just like just like dollar index. If I'm able to highlight this region, okay, so some region over here, okay, you want to pay attention to this level where it was acting as a resistance, okay. So if I take that as my previous resistance, you're looking at, that's where market has sort of pulled back to. And same thing that I normally say, when you're looking at this resistance and support zones, you have to pay attention to how market was able to break them. So just like that dollar index, look at this drop to the downside, strong break, then we got some resistance, okay, we came back up, got that strong breakout to the upside, acted as support. So you want to pay attention to such a level, okay, you want to pay strong attention to such a level and see how the market is going to fare from there. If I go to the 4-hour chart, just before we got this correction, you can simply see we had sort of an ending wedge formation. So we had this drop to the downside, then when we started getting this push to the upside, of course you expect some correction. So just to finish that wave, we got this wedge like formation. As I continue saying, we always wait for that first touch, second touch, third touch. Why I normally say first, second, third touch is because it's a more simpler way of explaining the Elliott wave analysis, because this is just an A, B, C, D, E, okay? But just to simplify it, first touch, second touch, third touch, in line with the 78.6. You got that strong drop on this one, and normally when I'm trading such patterns, I'm normally looking for a target around this level where the wedge like formation began, okay? So you're looking for that target, so that's also a target you can wait for this one to be attained on the Euro USD before any decision is made. So that's what I have on this one. So I just wanted to explain that before I go to my Aussie dollar. Aussie dollar daily chart, remember I've been talking about this one. Long term I'm still quite bullish, okay, just as I am on the Euro USD and most of the my dollar pairs. So you can see this one, higher highs, higher lows, higher highs, higher lows. You want to be paying attention to the patterns market is forming. So once we got this first impulse, we had a sideways correction in the form of a descending triangle. Then we had another impulse to the upside. Then we're just having this multiple sideways movement. And if I zoom in, just as I said on Monday, you want to pay attention to this zone that market is in, okay? So look at this zone, multiple resistance to the upside, multiple resistance to the downside. So we are currently waiting for market to show us the path of least resistance. Once we get a break of either the upside or the downside, it will be showing us where market is really heading to. But here, currently for now, it's just a lot of noise, and that's what you're getting at this level. You can see over here, market hasn't really gotten any strong directional bias of where it's going to go. So I'm paying attention to this support level as well as this resistance, better seen on the 4-hour chart. Okay, so if I zoom in, that level I'm talking about, so you can see we sort of had a triple top. Okay, by a triple top I mean this first touch, second touch, third touch on the upside. The downside, we've also had multiple resistance. So yesterday evening, when Janet Yellen or that news came out, we saw this strong spike to the downside, strong spike to touch the trend line. So if I just zoom it out so that you can see this trend line, so you can see that first touch, second touch, third touch, push to the downside to touch that level in line with the Fibonacci level 61.8, but we didn't get to break it. Quickly market retraced back up, got that resistance, support level, closed above the support level, and now market is still dangling above. So as much as we remain above this level, I'll be looking for bullish buyers, especially if the dollar is unable to break that level I was talking about and continue lower. Okay, but still on the other side, I will not negate that this market can still fall further lower. And if I go to the 1-hour chart, I have a sort of a wedge-like pattern that I'm watching. Okay, so in line with this, it's sort of a wedge or a flag, depending on how you can call it. For me, it's more of a wedge-like. It's not perfectly parallel with one another, so I'll be paying attention to this. If we get that break to the upside, then it's quite a clean break, and I'll be very bullish on this one. But if we continue further lower, then I'll be waiting for maybe that third touch of this level, maybe get another entry down here, because I'm betting on the direction of the trend unless the trend breaks. Okay, so I'll be waiting for that touch. Currently I have a trade running on this one, so I'm already bullish on this one. Took a trade last evening after that correction, after we were unable to break that support level that you're seeing on the 4-hour chart. Once we are unable to break this, quickly return into that one and watching to see this market rise higher and higher. Okay, so that's what I'm watching on this one. If I go to my other pairs, let's do USD CAD. Just what I'm watching. Daily chart, remember, long-term bias has been very bearish. So this one I'm still watching. This one you can see long term we've been having lower lows, lower highs. Last week and the past 2 weeks we've had the strongest bearish push. Okay, after this long consolidation over here, market really fell lower, especially if you're looking at things like oil, which I think Ken will show you. You've been seeing it getting some momentum to the upside. So that momentum to the upside is what really pushed this one further lower. But as usual, this one is just as the river moves and hitting its river banks in one direction, also this one is now at a critical level of, okay, so at this level you can see what I'm normally looking for. Look at that first touch, second touch over here, and the third touch. Then you can expect some correction to the upside from this level before we get any major correction to the downside. So that's what you're seeing for the past 3 days. Okay, so for the past 3 days, these candlesticks each represent a day. We've been having sideways movement. Okay, so we've not really gotten that momentum further down or any push strongly to the upside, but we can expect some of that to come in, especially if we get some oil weakness and that dollar to continue rising. Then we expect this one to really correct further up to push higher. Okay, so that's what I have on this one. Nothing much, but those are the main pairs I'm normally trading. Ken will come and analyze the rest. Dow Jones had a very good pattern yesterday. You can see this is a simply sideways movement within this ascending triangular formation, and yesterday during that news for Yellen, got that strong break to the downside. spike to the downside. Many people are stopped out of that one, and then today we are seeing market gaining that momentum. We are seeing that break above this resistance level, and you can easily see this market rally further up. If you go the 1-day chart, long term, we're still expecting this market to continue rising within this channel like formation. So I'm very bullish on the dollar. I'm very bullish on the stocks. Okay, so the dollar in the Wall Street US 30, I'm very bullish on that one, and they move in tandem with the Nasdaq 100 and S&P at times. So it's quite easy to find. Maybe also those ones are quite bullish. I don't have any major breakdown on them, but you can, I'm quite sure you can see quite some bullish momentum. But I don't get like you can see now on US 100 Nasdaq, there's quite some bearish momentum. So they're not always perfectly with one another because they're carrying different weight classes in them, which can be sometimes affected differently. But anyway, that's all I have for you guys today. I won't waste much time. I'll leave the floor to Ken. Come and analyze the rest of the pairs. Please, if you have any questions, ask in the chat room and we'll be sure to answer you. So those are my 2 cents for today. I'll leave the floor to Ken and I'll see you next time. Peace.
So hi guys, hope you're doing well. Hope you're having a wonderful time trading markets. So for us personally, we're looking at markets. We're looking at some of the setups that we should be watching. There's some quite interesting setups that are shaping up. So probably next week, this week, you can take some of those trades. It's only Wednesday, and with the momentum behind some of these moves, you will see markets really rocket. So like Caleb said, one risk that we're watching, one fundamental risk, is a rise in interest rates. So yesterday we just saw what it meant if there's a hike in interest rates. So just a mention of it meant some markets had to trade significantly lower. If you look at cryptos, we had some big drops. I think Bitcoin went all the way to 54,000, Ripple went all the way to 1.39, Ethereum went all the way to about 3,100 or something. Gold also traded significantly lower, and if you understand how markets work, you'll know that that was the main reason why markets traded lower. However, I don't think markets will really price in that as a serious risk, at least for now, because as much as Yellen pointed out that we could see a rate hike, ultimately the decision is made by the Feds, and the Feds have assured markets that it is not time yet to raise the rates. So I still think there's that chance that probably it's not happening now, and they still feel like some of the moves that took place yesterday were very, very good buying opportunities, and I'll show you some of the markets that I'm watching at least for today. So I look at gold, I look at oil, I look at maybe the Dow. Okay, Caleb has looked at the Dow, so there's no need of going through that. Maybe I look at GBP USD, and then I think we'll be done for the day and we'll wait for markets to shape up. So let me start off with gold. Let me just share my screen. Okay, so this is gold. Let's start off from the daily chart. So what happened on Monday? We had this huge move to the upside, and based on that huge momentum, I expected markets to at least continue moving higher, and we could see probably a move to 1820, 1825. That's what I really expected. And yesterday I had a short position which I can share with you in the 4-hour chart. It was executed after this breakout of a flag formation which I have on the hourly. So on the hourly chart, I had sort of a flag formation. We had a break and a retest of that flag formation. So let me just draw that flag. Yep, so you can see we had this sort of a flag formation, which meant a correction. Then you had a breakout, a retest of it, and then a continuation to the upside. So I was looking for that move higher, and I was actually in this position. But what happened was when Yellen pointed out that we could see a rate hike, immediately markets traded about 300 pips lower, and that's a tail risk. I think when you're trading, you should be able to think about the risks involved. There are certain things that can happen which you can't think about. The setup is fine, the environment is fine, but again, someone comments on something and markets react in a very different way. If you don't think about some of those risks when you're trading and you don't price them in when you're taking some risk, there's a high chance you'll blow your account. Because you were talking with Caleb and you were thinking about how many people got confused with this move. Like if you are in a long position, you probably even pivoted and went into shorts, and again, probably today, by the end of today, you'll get killed again, because ultimately this was just a temporary shock, and then ultimately markets will go back up. So as you can see clearly, I'm speculating that the markets will come back higher. So clearly now I can't rely on this flag formation. Instead, I have to rely on this third bounce of the trend line. So I'm betting that markets won't trade lower than 1765. And I think ultimately we could see the markets visit 1820, 1825 before the end of this week, if I'm right on everything, including the timing. So that's my outlook on gold. Next, I'll look at oil. Oil has been moving higher for quite some time now, and part of the reason is inflation. So if you look at the amount of dollars pumped into the economy over the last few months, there's a lot. So what happens during such times is commodities tend to get very, very expensive due to inflation. So they're pricing in the inflation risk, and oil is one of the most important commodities. So once we have inflation risks coming in, then oil has to price in that. Actually, I think oil could trade as high as $80 a barrel before the end of this year. Sometime between the second and third quarter, we could see oil make new highs at those levels. I have both fundamental and technical reasons for that, but I won't go into that, at least for now. Again, if you're trading some of these markets, just a piece of advice, try and avoid betting against the trend, because commodities are driven by supply and demand. Unlike the currencies whereby we have two currencies fighting against each other, when it comes to the commodities market, it's all about supply and demand. Once demand overwhelms supply, things start moving higher. And if you look at other commodities like corn, like cotton, like copper, everything has been getting expensive. So why not oil and gold? That's why I'm betting on also gold moving higher, at least before the end of the year. But interest rates are one of the things that you really have to watch once you're trading gold again. So oil, looking at it from a daily chart perspective, I still expect markets to move higher. Ultimately, you could see $70 a barrel, $75 a barrel very, very soon. On the 4-hour chart, if I just go back down to the 4-hour chart, we had a very, very beautiful channel with a powerful entry at this level, about a 600 pip move to $65 a barrel. A correction again, which happened on, I think on Friday, then on Monday we had this move higher, and now we are trading at 66.5. I was looking for a correction on the hourly chart, so let me just share the correction I'm looking for. I was looking for a correction at least to this level, and if it's a deep correction, a good one, I think I'd want a bounce off this line, then I'd take a long position. So I'm really watching between 66.5 and 67.5. I don't think the risk is tilted to the upside. I think the risk is tilted to the downside. I'd rather be short than long. But again, take care when you're betting against the direction of the trend. So you'd rather wait for this correction to just come in, and then you can buy this market in the event that you get a move back to $64 a barrel, $64.5 a barrel. That's a trade again that I think will play out next week, if I think about how long some of these moves will take and for some of these things to shape up. Unless something comes up, I think that's a trade for next week. So I'm looking for this move if it happens. But if this momentum continues today, then you could see this market come back all the way to $68 a barrel before the correction that I'm talking about. So that's my outlook on oil. Again, if you're buying at this level and you're aiming for this level, you really have to think hard about where to place your stop loss. And then that's the case, if your stop loss comes in at this level, then the risk reward doesn't make sense, so you end up staying out of that market, at least till everything shapes up in the right direction. So that's my outlook on oil. No setup at least for now, but I'm watching a very, very good setup, expecting it to form at least as time moves and as the markets will keep on moving. Next, I look at GBP USD. I think there's something interesting also here. There's something cooking up. Looking at it from a daily perspective, so GBP USD, the dollar is getting weaker. When that's the case, we expect the markets to keep on moving higher. So any other pair that's compared against the dollar. On Thursday, we have some risk. Is it today, tomorrow? We have some risk in this one. So will the Bank of England raise rates, or will they leave rates at the current level, or will they actually lower rates? We don't know what will happen, but the decision is supposed to be made tomorrow. And after the decision, we expect the central bank governor, Andrew Bailey, to give up a comment, or at least some opinions on what he thinks about what will be happening with rates, at least in the short term and in the long term. So with that, you can see clearly for the last few days, the pound has not done anything significant, just moving sideways. But if you look at it from a long-term perspective, from a big picture perspective, it's quite clear that we're shaping up for a move to the upside. So we had this flag formation which was in confluence with this first, second, third bounce of this channel. I'm looking for a powerful move to 1.45, 1.5 level very soon. I think this is a very good trade. The level I'm watching is the 1.4 level. If I just come back down to the 4-hour chart, you can see clearly the 1.4 level has been capped for quite some time. So you can see 1, 2, 3, 4, and now we're still trading lower. So I think once we get this breakout, you could see a very powerful move to create new highs at the 1.45, and you should be very keen on how you trade that market, at least for some time now. Ever since March, I think for 2 months, for 2 months now we've sat in this consolidation, and now I think it's time for a breakout to happen. And if I was to bet in the direction, I think I'd bet to the upside. So I'm really keen on what will happen to the pound. On the hourly, I have this sort of a trend line that I'm watching. So the first bounce, second bounce, will you get a move lower or will you get a bounce and then a move higher? As the dollar keeps on rising, we could probably see some risks in this one, just sitting in this consolidation. But ultimately, I think the direction is to the upside. What remains for me is for me to get a good setup, a good entry, and a good risk-reward ratio for me to position myself into this market. I don't want to be long and not short. So someone has said we do a dollar recap. That was a question. So I'll just try and cover what I think is happening on the dollar. If I just look at it from a daily chart perspective, so this is what is happening. So on the daily chart, we had the first bounce, second bounce, third bounce. We expected the formation of new lows to come in at 88.5, 87.5. But what happened? We had the first bounce again, second bounce, third bounce. I think this is a correction just to this level, 92.5, 91.5, 91.7, 92. That zone between 91.5 and 92. You can see the markets trade between these levels and then come back and continue the downward direction. I don't think there's anything fundamental that will change the direction of this currency, at least for now. As much as Yellen points out, we will see a rate hike. I don't think there's any sane person who would want to be owning dollars, at least for now, because with the rate of inflation, I don't think cash is a good investment. And then that's the case, people look for alternate places to put their money. So that's on the daily chart. On the 4-hour chart, I don't pay special attention to the dollar. I think Caleb looks at it much more than I do. I just look at what happens on the daily chart, and then I can be able to tell how I'll position myself when I'm trading other assets. So if I just look at it from the 4-hour chart again, I think we could see a move to $92 a barrel, $92 mark. I think that's ultimately where I want to see the dollar trading before I can come in short. So that's where I'll stop, at least for now, on the technical analysis, and then I'll answer the questions that I can see on the chat room. So someone is asking, does the commitment of traders report influence your decisions? No. So for us, we are focused on the technicals, we are focused on the patterns, we are focused on price action. We don't look at the commitment of trader report, but we know about it. We know that if certain people are long, then the markets can do this. If this number of people are short, then you expect the markets to do this, but we don't look at it. We just focus on the price action. If you're looking at it and it's working, I think it's right for you to just keep on using it. Again, in this business, we have learned over the years that there isn't any one way to do it. You just have to find the way that is working for you, and then try to make as much money as you can from that method. So I'll stop there. I'll see you guys next week, and we wish you a profitable week. See you next time. I'll be leaving. Okay, someone has a question. We'll give you the time to ask your question. We'll give you the time to answer your question. Okay, so someone is asking the crypto day. So we were talking about cryptos and how we look at cryptos, and we actually concluded that instead of covering it via a Zoom session, which is something short, something that most of you probably won't even get access to via the YouTube channel, we're starting out a podcast. So we are just finalizing some of the things. I think from next week but one, we'll be shooting some of the episodes in the podcast. One of the episodes you're planning to shoot is all about cryptos. What you think about cryptos, our knowledge on cryptos, how you can capitalize on cryptos, how you can make money in it, the risks involved, the hype around it, all these things. Because like yesterday, we were actually talking with Caleb, and I was telling him it's so funny, many people don't even understand why the cryptos went down, the risks involved on cryptos going down, and why they are moving higher, at least for now. You really need to know all these things before you can at least put your money somewhere and make sound decisions when you put your money there. So yeah, we'll cover cryptos, but I won't say the date exactly, but we'll cover them soon. It will be an extensive session, about 2 hours. And actually, we were to ask you guys if we'll be posting some of the topics we'll be covering, and if you have any questions around those topics, please feel free to ask us those questions so that we can talk about them in that podcast and then answer some of these things that you guys have struggled understanding. So I think I'll stop there. I'll see you guys next time, probably in that podcast, and peace.